understanding the difference between dilution and diluting the float will help you avoid losing money on a lot of these trades. Whenever you get a large number of authorized shares, that's not any big deal. Many companies will use those shares in order to borrow money. When a company pulls from the authorized shares and creates dilution by giving a set number of shares to a loan shark in order to borrow money to grow the company, you can have dilution in the company and it won't affect the stock price until those shares are sold on the open market, which makes the float grow. And most times when a loan shark receives shares, those shares are restricted for a certain period of time. Most times it's a year. So when a company announces dilution, it's not any big deal as long as the shares are restricted. The thing that you want to look out for is when those shares that the loan shark has become unrestricted, because as soon as the shares become unrestricted, those shares can then be sold on the open market. And when those shares are sold on the open market, that makes the float grow and it drives the price of the stock down. So a company can announce dilution, let's say on January 1st of 2020, but the shares are restricted until January 1st, 2021. So even though the dilution has been announced, it'll take a year before the loan shark can start dumping those shares into the float or onto the open market. And the reason that those shares drive the price down considerably and quickly is because most times those shares were given to the loan shark at a massively discounted price. So whenever you see a company getting an injection of funds in order to grow the company and they give shares to a loan shark in order to receive those funds to grow the company, you're still in good shape holding that stock until those shares become unrestricted. So a lot of times when a company gets an injection of funds from a loan shark, the price of the stock will go up considerably until those shares become unrestricted, at which time that loan shark is going to start dumping those shares onto the open market, which grows the float and drives the price down. So the main thing that you're going to want to look for in the filings is to make sure that those shares are restricted. So dilution is not a big deal until those shares become unrestricted. And the reason I'm showing you this chart ENZC is because the shares that these loan sharks were holding were restricted until about right in this area right here. And in the filings, those restricted shares changed to unrestricted, at which point the loan sharks started dumping shares onto the open market, which grew the float. So, and as you can see, it continually drove the price down for over a year. And you're going to have to learn how to read the filings in order to determine if the loan shark shares are restricted or unrestricted. So dilution is okay as long as the shares are restricted.